DLF?
A good recovery here for DLF, but my belief is many of the real estate counters, IVS Infra, Unitech, etc., HDIL also mentions. I think most of them are witnessing short covering, because I think that is where you see this strong kind of performance coming across in many of the real estate stocks just on a single day. So my belief is that probably the short covering would last for a couple of days more. DLF from 248 to 50 could last till 255 to 258 levels. But I think that could be about it, because it's facing a severe sort of a selling pressure coming across around 260 levels. So I think anyone who's probably playing for trading pop, I think you can look for a 5 to 6 rupees gain for more on DLF.
Would you recommend a tactical move, a buy perhaps, on names like a Hindustan Copper and IVRCL, and what levels?
Well, I prefer GMR Infra. I think that stock mentions some bit of probably observation at this point, because you look at the chart performance for the last 1 month. I think when the market or the real estate packs were or the infra packs were more or less underperforming or going deep correction, this was one stock from 17 it has corrected to 22, 21 levels, and I think it's showing that that signs of first buying coming across. It's trading about the 200 DMA, which is very rare that the stock below from the 200 DMA has managed to surpass the 200 DMA. Good sign for the stock. So I think GMR Infra mentions a trade at this point. My sense is the stock could probably be heading to 2350, 24 levels in the next 15 days or so.
And Sterlite?
Metal counters, Rima, I would definitely avoid at this point. Sterlite, Hindalco, Tata Steel. I think they're more or less on a short trend or a downtrend. I would probably wait for a significant bottom to happen, because I think two of the only sectors which are currently underperforming the market even on a day like today is auto and metal stocks. So I think I would probably avoid these two sectors at this point, trading on the long side.
All right. Kunal, thanks so much for joining us.
Mr. Tulsian is also with us. Mr. Tulsian, hi. Welcome to the show. A disaster debut for Repco. It's down 5.5% right now. Where do you see that one stabilize?
See, Sonia, in fact, it was expected that, there was a very dull response from the retail space. In fact, maybe the institutional investors have come to the rescue of this issue. But I don't find much, negative in the stock, because nothing was really expected. Yes, the price was seen aggressive. Nothing was really left on the table for the investors and all sort of things. But I don't think that there is any kind of worry, because if you really see the quality of the performance in the housing finance space and price to earning multiple of maybe close to about 11 times. The only worrying point is that in the last 3 years there has been a drop in the NIM margin. The net interest margin, which was at about 5% plus, has fallen to about sub 4%. So that was a worry, but this whole thing was known. So maybe yes, the stock should settle at the current level. I don't think that much downside can really be seen. One can expect to see the stock moving in the range of about 150 to 165 maybe next couple of months. This is really not the stock for the retail investors, those who who track the stocks on a daily basis. But yes, I don't find it anything wrong. If you have a longer term horizon, even the buying can be contemplated at a level of about 150 to 155.
Mr. Tulsian, what is your view on Novartis India and the developments on the Supreme Court judgment on Glyvic?
See, definitely it is negative for the company, but if you really see the all the MNCs, the pharma MNCs which have been operating in our country, practically they have not been spending anything on the R&D, nothing, the new products were getting introduced. That is the reason, in fact, we have been seeing the dull performance of all these companies, and that's the reason even the valuations given to them are quite low, maybe in a P multiple of anywhere between 12 to 15. Even Novartis, having posted an EPS of 29 rupees for 9 months, is ruling at a 575. That means at a P multiple of close to about 15. While the Indian companies, whether you take the Cipla, Dr. Reddy, they are all ruling at a P multiple of 20. So all these pharma MNCs have been dull and boring, but yes, because of this negative judgment in favor of the Supreme Court, because the appeal of the Novartis has been dismissed, so the share has corrected, but sooner or later I think it will bounce back and settle at around 600 to 615, 20 or so. But nothing upside, we've seen in the stock in the near future, or maybe in the next 6 to 8 months as well. Maybe the strong hands are playing within that range or within that band.
Welcome back. You're watching Prime Property. Bangalore-based Prestige Estates is one of the top realty picks for brokerage firms like CLSA and Jefferies. In fact, Prestige was also the first real estate company to comply with SEBI's minimum public float norm. The promoters pared their stake from 80% to 75% in January via an institutional placement program or IPP, an issue that was subscribed 2.75 times. The company's CMD Irfan Razak now joins us on Prime Property to talk about the company's future plans. Thanks, Mr. Razak, for joining us here. You know, Prestige Estates is a company that in the first 9 months of FY13 surpassed all the guidance it had offered for the full fiscal, be it for sales, launches, etc. For the new financial year, what is your new guidance for launches?
See, this year we had given a guidance of about, I think, 8 million square feet. And we have exceeded that, and we've almost touched, maybe crossed 10 million of launches. And going ahead in the following financial year, we should exceed the 10 million launch, and it looks to be pretty exciting. There's a lot in the pipeline and a lot of projects that we've been working on for the last couple of years. We see them fructifying, and approval, as I said, I expect it in a month or so. So there's going to be a very strong launch calendar, and it's going to exceed the 10 million what we did this year.
Okay, but Mr. Razak, does this launch pipeline include Prestige foraying into new cities? Will Prestige get out of its comfort zone of Bangalore and South India?
Yes, actually we are established well in Bangalore. Now we are increasing our footprint in Chennai. We are present in Cochin. We have tied up several new developments in Cochin. We are in Hyderabad. We have tied up a few properties in Hyderabad also. Apart from that, we are looking at cities like smaller cities like Coimbatore or maybe Goa and so on and so forth. So and Mangalore. Mangalore, we are even building a mall currently in a small residential development, and there is potential in these cities, but not as big as what we have in Bangalore. But all these little bits do add up to a large total. So there is quite a bit happening, but we are pretty much in the south at the moment.
Mr. Razak, can you give us details of these projects that will be launched? What kind of prices, for example, can we expect?
See, for obvious reasons, I will not be able to give you the names and the locations of my coming launches. But it will be, as I said, the ticket size can vary from even 35 lakhs going up to 2.5-3 crores. So there's going to be a mixed bag. There's going to be something for everybody, and there's a pretty exciting launch pipeline that we have lined up. And it's only a matter of a couple of months that we'll be coming in with quite a number of things. You
mentioned all these new cities that Prestige will be entering. So, are you buying land, or is it, let's say, via joint ventures with landowners or even local developers?
No, it's a mixed bag. You see, it could be a joint venture with the landowner. It could be a purchase. So it all, as I said, it depends on the location of the property. It depends on what opportunity it presents itself and what type of terms it comes. We have identified a few things, and we have to see how it pans out.
Mr. Razak, when I asked you about upcoming launches, you mainly spoke about residential projects. So is that the segment of real estate Prestige will be focusing on? Also, this mixed bag of launches you speak of 35 lakhs to 1.2 crore rupees. Should I then assume that Prestige is not focusing on luxury or super luxury projects?
Yeah, actually, see, basically residential is where you get your revenues. Residential is where you get your turnover. And I think our focus will be primarily residential. Not to say that we lose focus on the other categories, but residential will be our baseline. And in residential itself, I believe the business that will happen and will continue to happen is in the mid-income residential housing and mid to premium. So we will stick to that, and then we will definitely be doing some premium, super premium and luxury, but luxury and super premium really doesn't have a very large market, and it has a niche market. There are a certain breed of buyers who want to buy for themselves. They are not looking at growth on capital, so they buy there. But the mid-income is where the actual home users come in. Now, and of course we will be, as commercial is also our strength, IT is our strength. So commercial and IT development will happening, as we'll probably be balancing and looking at how the demand versus supply is, and then it will continue. And we are getting strong in the shopping mall area. Now we are going to complete 3 malls in the current calendar year, and another 3 are in production and 2 in planning.
Mr. Razak, I want to get back to the guidance that you had offered for FY13. You, for example, surpassed the sales guidance in the first 9 months of the full fiscal. Looking back, do you think you gave a conservative guidance?
No, I don't think there was any conservatism. We were realistic, you see, because the previous year we had done 2,100 crores of sales. So what we really did was, we said, we looked at all what was happening on the ground, and we said this current year we should, an achievable target will be 2,500. If we have exceeded that, I think that goes to commend the team that has worked to see that we got our approvals and see that the launches that we did were successful. And the market itself, that shows that whenever a premium development in a good location from a brand like ours is launched, there is enough acceptability and people are ready to commit themselves and buy. A brand like ours is launched, there is enough acceptability and people are ready to commit themselves and buy.
Analysts say Prestige's margins are good but could be better. How do you answer to those critics?
We cannot ignore margins. Margins have to be there. We have to protect our margins. Otherwise, how do I take care of my overheads? Having said that, we have to do realistic margins. We as a company have never looked for super profits. We've always looked for realistic margin. That's probably one of the key to our success. We do our costing. Based on our costing and some calculation for since our project runs over life of 3 years for inflation, all this is added up, and then we have a realistic margin of 35%, 30, 35, 40%. So that is the thing, and then with the inflation, if the value of the development or the product itself grows, the customer is happy that his investment is secure, number one, and secondly, there's a growth on capital.
Okay, so you're happy with your margins. Now, developers' high debt is a big area of concern. What's Prestige's debt like? And what about debtors? Prestige does get criticism for having too many debtors. Is all of this manageable?
See, debt is pretty much under control. And today we have a debt-equity ratio of some 0.44 or 0.45, which is very much below whatever is happening in the industry. Because we believe in our residential development, we should be positive cash flows. If the debt is there in my balance sheet, it's only where we are creating assets for rental income, capex projects like shopping malls and IT parks and hospitality assets. Now this comes from a combination of debt as well as internal accruals. Residential per se is more or less or all the time is got positive cash flows. The only time probably we need to block in capital is when we commit ourselves to buy some land or we pay deposits to the landowner for joint development agreements, and that comes in from internal accruals. So I think we are pretty much there. Even our debtors, like you asked, debtors also have been considerably brought down, and there will always be that time lag between collection and with the type of volumes you are doing. But I think we have no concern as far as the debtors are concerned, because ultimately the product itself, the home itself, is not handed over to the buyer till he clears the last rupee on the statement of account.
But do you have a roadmap for debt reduction?
We've reduced debt considerably, and as things stand, with the generation of cash that has happened, collections have been good. I think they have been at an all-time high. We've had the quarterly collections of almost 500 crore plus in the last 2-3 quarters. That helps us to have surplus cash flows. And once you have surplus cash flows, automatically the debt also, the reliance on debt will definitely reduce. As I said, the only place that I need to probably grow debt is for the completion of our capex projects. But then at the end of the day, the capex projects also become self-funding in the sense that once the product itself is ready, once the development is ready, it becomes into a lease rental discounting method. So I don't really have to look for cash to pay back my debt or service my debt, it gets paid back from the rental income that's generated.
Mr. Razak, we just saw Prestige doing a fresh equity issue, an IPP that brought down the promoter stake from 80% to 75%. How exactly will that 350 odd crores raised via the company be utilized?
Yeah, I mean, the whole idea of this was to dilute as per SEBI norms, and this is again helping us to invest in land in the cities that we intend growing, like Chennai and even in Bangalore and other places. And it's going to be a combination of several things, and we will be using that money pretty judiciously.
Okay, so mainly to strengthen the company, but you are done with one round of fundraising. Any other such exercise on the anvil, even if not via the capital markets, but let's say via private equity for specific projects?
I think we have to see, it depends on the size of projects that come. It's always good to be comfortable and low on debt and have surplus cash flow. So there are many opportunities that present themselves in terms of PE players who are available in the market. So if some deals do come in at sensible terms without any fixed commitments, we are exploring things all the time. I mean, it's a very dynamic situation.
Okay, so nothing specific on the table as such. Now let's talk about your delivery timeline. Are you, Mr. Razak, like other developers, running behind schedule?
Now, at the moment, all my projects are running on track. I think we also had our learnings, and we've realized that if it's a very large development, the time that it takes is going to be longer than what. So depending on the size of the development, we finalize and close out the delivery times. It could be anywhere in the region between 2.5 years to 4 years. So, and we've also learned that maybe we can, instead of doing everything in one go, maybe phase out block-wise deliveries also.
Okay, so before I let you go, I have to ask you, what exactly is it that you've learned? Will you ever be late again?
We never learn everything. We keep learning every day. We can't stop learning. But there is a collective experience that we have. Probably that's an advantage that we have over others.
Okay, Mr. Razak, I actually really appreciate that candid answer. Thanks so much for joining us here at Prime Property. We're unfortunately completely out of time, but that was Prestige Estates with you with its expansion plans. We'll see you same time next week. Goodbye.
Now, with the Indian car market veering towards diesel, Honda has had its share of trouble in India over the past couple of years. But now the company is finally ready to jump on the diesel bandwagon with its first compact sedan, the Amaze, which will debut next week. So here's what Team Overdrive thinks of the new car.
Based on the Brio hatchback, the Amaze sports familiar styling cues. But unlike other compact sedans in the market, Honda has integrated the boot cohesively. Despite a longer wheelbase, the Amaze also manages to squeeze in at under 4 meters in length, thus benefiting from excise duty brakes. Talking of size,
there isn't a single sedan in this entire segment that offers this amount of space inside it, and that's basically down to this seat here. This one piece with the integrated headrest. Well, this is a very thin, slim seat, and you've seen the same thing in the Brio, but the real benefits of this can only be reaped inside the Amaze sedan.
the rest of the cabin is almost identical to the Brio, which means there's nothing to complain about, even if it doesn't feel quite as upmarket as the current class benchmark, the Maruti Dzire.
Honda's new Amaze is going to offer 2 engine options. There's a petrol and a diesel. The diesel, the big news, the game changer for Honda is its 1.5 litre common rail turbocharged direct injection diesel. It makes 100 PS and 200 Newton meters of max torque. So it's a very torquey engine. Tremendous amount of punch that it carries. Drivability also is quite phenomenal. Higher gears, low speeds, this engine just chugs along very comfortably. ARAI certifies the fuel efficiency at about 25 kilometers per litre, and that's the best you can get in this segment.
The Amaze will be launched on the 11th of April, and we expect it to be priced on par with the Maruti Dzire or slightly cheaper. With competitive pricing, spacious interiors and best-in-class performance, Amaze seems to have all the right ingredients to become a winner for Honda in India.